welcome to Fair Isaac Tech Talk, where we discuss ideas in technology for decision management. I'm Darcy Sullivan of Fair Isaac, and today we're talking to Dave Lightfoot. He is a Vice President of Product Management here at Fair Isaac, and we're asking him the question, how can businesses move past a siloed approach to taking decisions? So, welcome, Dave. Can you tell us, what is Fair Isaac doing to create a decision management suite of products, and why are we doing this?
There are a couple of reasons. The banks and the financial institutions and the insurers that we've worked with realize that the way in which they've made decisions in the past doesn't really match the way their customers perceive them. So if I'm a customer of the bank, I don't think about the card division of the bank or the loan division of the bank or the checking account division. I think about the bank, and I have an expectation that the bank will understand my relationship with them and use that information to take care of me, to understand my risk, to understand my worth. The banks realize this, although the manner in which they've grown over the years is organized in divisional lines, and the technology has grown in divisional lines. So for an institution to manage a customer as a customer sees the institution requires, if you will, a reinvention of the technology platform that will facilitate a more holistic view of the customer and allow that connectivity between decisions. And it requires the business to consider the customer in a broader way. So rather than just looking at a card relationship and making decisions about that, or the loan relationship and making decisions about that, taking all of that data into the aggregate and saying, what is this customer worth to me? What risk does the customer represent? What decisions have I made about this individual over time? And how has that affected their performance? And how do I use all of that insight to influence the decisions that I'm going to make for the go forward, so that I better control my risk, I better drive value from the customer relationship and retain that customer, and I position myself for growth, and very importantly in the current climate, better transparency into how I'm making decisions about my customers, so that I can fall in line with changes in the legislature and be more agile in responding to those things over time.
What does a suite approach to our products involve? These are obviously products that we have now. So what are we actually doing to these products?
What we're doing is we're taking what were formerly subtly different architectures and we're bringing them into a common structure. So the value here is, if you look at originations, it comprises several aspects. It's got prediction of risk. It's got the presentation of cases to an underwriter to decide whether they will or they will not approve a loan. It involves access to external data sources such as credit reference agencies to retrieve information to augment the risk prediction. It involves document production, so loan agreements and so on. There is a huge degree of overlap between those functions at the originations phase of the life cycle and similar functions in collections and recoveries, where if I'm a collections case, then I will need to create a case for, not this time an underwriter, but for a collector to intervene and actually deal with the customer. I will need to produce documentation. I will need to reach out to external data to augment my risk prediction. I will need to organize that information in a way that I can measure the performance of the activity, similar to originations. So what we're doing in the DM suite is we are breaking down, if you will, those life cycle processes and equating those to common components that we know will be necessary for originations, collections, fraud control, customer management, and we're creating consistency in the production of those components, so that if I'm a client, I will deploy the case manager for the DM suite, and it will be viable for originations processing. It will also be viable for fraud case investigation and for collections case investigation. We are essentially reducing the number of moving parts of the whole machine when viewed from a life cycle perspective.
So what will clients be able to do when they have this suite or some of the products in the suite that they can't do today with their current systems?
Okay. that comes back to my comment on connected decisions. At the moment, what I can do if I've got a separate collection system or a separate fraud system is I can work within a data footprint that is relevant to that application today. What is challenging, and I've experienced this as a client and in my time at Fair Isaac, is actually bringing the data together and making it accessible so that I can improve the quality of my predictions and I can improve the quality of my decisions. Our decision management suite is going to operate on top of a common logical data model so that I know that if I want to bring a piece of data into play in collections that I've used in making the decision about pricing or about credit line management, that data is available. The format of the information is similar between the two life cycle decisions, so I can readily access it. I can know that it's going to be usable, and I know that when I use it, it's going to be done in a manner that isn't disjoined between the decision that I made in originations or in customer management and the decision that I'm trying to make in collections and recoveries. So it's, again, the common theme of access to a broader array of information, to a deeper depth of information, which will improve the quality of my predictions and improve the quality of my decisions.
Great. And who's really helped by this approach? Who gets the most out of it? Is it the business user? Is it the risk manager? Is it, that type of person? Or is it more the CIO, the IT organization?
Benefit for the IT shop in that common technology and common architecture drives down the cost of ownership over time, and for the business user access to more information and deeper information that we know is consistent gives me the ability to improve my predictions and the ability to improve my decisions. Both better predictions and better decisions means better business value.
That's today's Fair Isaac Tech Talk. Thanks for joining us. You can hear Dave Lightfoot talk about the value of connected decisions at Fair Isaac's upcoming Interact conference. That's March 10th through 13th in New York City, and you can learn more at www.myinteract.com. You can also read about this topic in a white paper called What's the Payback on Connected Decisions? And you can find that at fairisaac.com/insights. We invite you to comment on this posting, subscribe to our podcast series, or watch more Tech Talk videos at fairisaac.com/Tech Talk. It's a great place to learn how to advance your business's decision management.